very warm welcome to this Thursday's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I'm Grace Baragu. It's the 20th of November. We thank you for joining us at this time on the show.
All right, let's tee up with your news now. President Cyril Ramaphosa delivered the keynote address at the closing of the Business 20 South Africa Summit in Sandton ahead of the G20 Leaders Summit. The three-day event focused on inclusive growth and shared prosperity, brought together global business leaders and policymakers. Ramaphosa emphasized the importance of G20, B20 partnerships in driving enterprise, innovation, and sustainable economic growth. Let's listen.
Africa has some of the fastest growing economies in the world. It has the youngest population, and it is endowed with abundant resources, natural resources and human capital. It is also endowed with critical minerals that will build the economy of the future, and with the fertile lands that can feed the world, as well as having the sun and the wind that will power revolution in energy. The African Continental Free Trade Area provides an unprecedented opportunity to harness these resources for the good of the people of the continent. It promises a new era of trade, of investment across the borders that had so far been held back. The Africa Continental Free Trade Area promises greater alignment of rules, of regulations, of standards, as well as of laws. It promises the seamless movement of goods and the provision of services across a market of 1.4 billion people. As the work done by the B20 has made clear, Africa has the potential to be the next frontier of global production, commerce, as well as innovation. And we will call on the global community to embrace Africa's rise. Some years ago, the front page of The Economist magazine depicted Africa as a continent that is lost, that is backward, but Africa is on the rise. It is Africa that seeks to be more prosperous, and by being prosperous, we'd like to believe that we therefore will have a more prosperous world. An Africa that is at peace, that is stable, that is well-governed, and that has the means to meet the needs of its people, makes for a better world. If the G20 is to realize its mission of fostering a more stable and prosperous world, a mission which was its original mission, then Africa's growth and development must be made.
In central banking news, South Africa's Reserve Bank has cut its main lending rate by 25 basis points to 6.75%. The decision, announced after the first MPC meeting since the country lowered its inflation target, eases earlier concerns that the new target range would limit room for rate cuts. Let's now listen to the governor speaking earlier.
The MPC decided to reduce the policy rate by 25 basis points to 6.75% with effect from the 20th of November. The decision was unanimous. Members agreed there was scope now to make the policy stance less restrictive in the context of an improved inflation outlook. The quarterly projection model continues to forecast gradual rate cuts as inflation subsides. As before, this rate path remains a broad policy guide. Our decisions will continue to be taken on a meeting-by-meeting basis with careful attention to the outlook, data outcomes, and the balance of risks to the forecast. For this meeting, we considered two risk scenarios. The first scenario featured a US dollar rebound, recognizing that while the rand has appreciated this year, this partly reflects broad dollar weakness, not just rand strength. In this scenario, the rand depreciates back to its 2023 levels against the dollar, rather than holding on to its recent gains as in our baseline. The second scenario was based on higher administered prices, linked to a rapid correction of the 54 billion rand electricity price error disclosed a few months back. The scenario also had inflation expectations staying higher for longer in response. Both scenarios featured tighter monetary policy, with rates coming down more slowly compared to the baseline.
In Ethiopia, Ethiopia Investment Holdings has signed an MOU with Rusal, one of the world's largest low-carbon aluminium producers, to advance plans for a large-scale aluminium smelter in Ethiopia. The proposed plant will have a capacity of 500,000 metric tons per year, positioning Ethiopia as a key regional and global supplier while reducing foreign exchange spent on aluminium imports and supporting local industrial growth. The project, estimated at $1 billion for its first phase, is expected to receive about 70% debt financing and could be completed within 3 to 4 years. EIH said the facility could operate for up to 50 years, delivering long-term industrial value. In other news, Choice Hotels International, one of the world's largest lodging franchisors, has announced its entry into Africa with 3 franchised hotels in Kenya expected to open in early 2026. The portfolio includes an Ascend Collection Hotel in Masai Mara and a Clarion and Quality Inn in Nairobi, serving leisure and business travel demand. CHH also signed a master development agreement to open at least 15 more properties across sub-Saharan and Southern Africa by 2030, expanding its EMEA portfolio and joining the Choice Privileges loyalty program. In monetary policy news, Rwanda's central bank has kept its key lending rate unchanged at 6.75%. The decision, announced after the latest Monetary Policy Committee meeting, reflects the bank's assessment that inflationary pressures remain under control and the economic outlook is stable. Let's hear more from the central bank.
So the committee's last set of assessment was around inflation trends, and in the third quarter of 2025, we observed a slight increase in inflation at 7.2% compared to 6.7% that we had in the previous quarters. But inflation still remains within our target band. And in October, headline inflation was at 7.1%. This slight uptick in inflation for quarter 3 was largely due to increases in core and energy inflation, as you can see in the graph, which outweighed the drop in fresh food inflation. The fall in food inflation and food prices was expected because we are already in the harvesting season of season A, and we've observed also improved domestic supply. Coming now to our forecast for inflation. We forecast headline inflation to average 6.9% for the whole year of 2025. And this is slightly lower than our previous estimates in August, which were 2 basis points higher. In 2026, our forecasts indicate an inflation falling to 5.8%, which is really closer to our 5% mid target for 2026. Factors that might impact these projections include potential weather-related shocks, especially rainfall patterns that might impact food production and harvest. We also have analyzed geopolitical tensions and volatility.
In earnings news, Investec has reported a slight dip in interim profit, with pre-tax earnings down 2.5% to 445.5 million British pounds for the 6 months to September 30, as lower interest rates weighed on income. Net interest income slipped 2.1% to 670.1 million British pounds, but non-interest revenue rose 1.9% on storage fee income from the UK banking business and higher annuity fees in South Africa wealth and investment. Total revenue was flat at 1.10 billion pounds. Net core loans grew 8% annualized to 33.7 billion pounds, while customer deposits rose 3.6% annualized to 41.9 billion pounds. Funds under management in South Africa wealth climbed 13% to 26.5 billion pounds. The group declared an interim dividend of 17.5 pence, up 6.1%. Basic EPS increased 3.3% to 37.8 pence, with headline EPS up 0.3% to 36.7 pence. Finally, on the news now, Safaricom PLC has received regulatory approval to launch a 40 billion Kenyan shilling corporate bond to upgrade infrastructure in Kenya and Ethiopia. The medium-term note program will enable the telecom giant to raise long-term capital through the program, with the release of an information memorandum and pricing supplement for the first tranche of notes. I am Melissa Enoch, and that's it for News Now this Thursday. The show returns shortly with Grace Agbaragu at the FMDQ archives, giving us our markets round. Stick around. Welcome back to Money Moves. Let's now go over to Grace for today's markets review. Hello there, Grace.
Hi, Melissa. Let's now track how the markets traded today, starting off with the equities. The African equities were mostly negative today. The Nigerian Stock Exchange declined 0.32%, while the BROVM also slipped 0.08% to 343.62. The Nairobi Securities Exchange gained 0.05% to 188.26. In South Africa, the Johannesburg Stock Exchange fell 0.15%, while the Zimbabwe Stock Exchange gained 1.72%. And in North Africa, the EGX 30 also fell 0.51%. Let's do a quick round on some of the Pan-African currencies. The rand firmed 0.23% to 17.24 against the dollar. The Egyptian pound weakened slightly, down 0.12% to 47.44. The CFA franc fell 0.77%, while the Kenyan shilling strengthened 0.31% to 129.65. The Moroccan dirham rose 0.26% to 9.29, and the Nigerian naira depreciated 0.30%, trading at 1,453 naira 64 kobo. Let's switch into the commodities data deck, beginning with energy prices. Brent crude rose 1.05% to $64.18, while US WTI gained 0.99% to $60.03. Natural gas slipped 0.40% to $4.53, and RBOB gasoline eased 0.06% as of 13:26 GMT. Now, finally, two metals prices. Gold edged up 0.20% to $4,091.10. Copper gained 0.23% to $5.03, and platinum advanced 0.55%. Aluminium rose 0.05%, and iron ore slipped 0.05%, trading at $104.26 in Wednesday's session as of 13:27 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those market updates. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching, and bye for now.